Hey, Maricela.
Hello.
How are you?
Doing well. My brother decided to join us. This is my brother Wally.
Hi.
Hey, Wally, nice to meet you. I'm trying to get the link to my husband. I think he might be able to attend. So,
You haven't been to one of these before. Maricela and I, we've been on some of these, and basically we just kind of shoot things around, and any questions that you have about apartment investing or even real estate in general.
I must say, shamefully say, I don't really keep a pulse on the other news. So tell me what happened. And I was
Oh,
in the
it's
war. I was working. Just
Yeah,
kidding.
no, that's fine. It's fascinating. It was kind of I was going to post about it on the CRNA business and investment strategies page, but it was already there. But yeah, just fascinating. So basically, a subreddit topic came up, and these guys decided to like millions of people pushed to try and basically take some of the power back from some of the Wall Street brokers. So basically, what happened was a couple of these big hedge funds had shorted GameStop's stock, and were looking to make a lot of money off of it. And this subreddit basically got people together, got millions of users in Reddit together, and said, we want to screw somebody on Wall Street. Let's, take these hedge fund managers out. And so people started buying up tons and tons of GameStop shares. And so this all started back on January 11th. Since January 11th to now, so roughly 2 weeks, the price of GameStop stock has gone up 17,000%.
So
Wow.
So
essentially right now, or let's say December 31st, right? I'm looking at it right now. It was $18.84. Now it's
today,
$347.51.
yeah.
Um,
So, and they're doing a similar thing with AMC Entertainment because everybody's shorting the movie stock for AMC, and that stock went up about 175% today. So, I mean, it's an interesting time for certain stocks in the stock market, but I found that to be fascinating. I don't know what
Well,
you guys think about it.
yeah.
And that's why we're in real estate.
Well,
Not as volatile.
pretty much, pretty much. So,
yeah,
um,
the same concept. We do have military retirement, and I have a solo 401k that I fund as with my CRNA job. So we put money in there, but as soon as we can, we roll it into a self-directed plan, and
mhm,
we put it into the invest in a real estate. And so we do it that way because it creates an expense to the company that is matching or contribution.
mhm.
And we feel that at least we somehow control the real estate, and if we make those mistakes, at least you have some time to recover. If you hold, if you have a valid strategy for exiting the plan, at least you would not lose completely the whole investment, but
Mhm.
could be proven wrong too. So but it's a risk wherever you want to go. I just feel more educated in the real estate investing, and that's why we heavily invest in all kinds of real estate investing as a
Yeah.
variety.
Well, and I think it's an interesting lesson that, not everything's as sure of a thing as you think it's going to be, at least not in the short term. So probably better to invest a little bit for the longer term, for sure. But Ryan, I see you're on with us. Good to see you, buddy.
Hey, thanks. Thanks for having me. Sorry I'm late.
Oh, that's okay. We're just kind of getting underway. We were talking about the GameStop stuff going on
Oh
today, and
yeah, I was following that Reddit feed today. I was, I was actually just laughing because, it's if you read the trolling, it's actually really funny when they're kind of they're taunting the headphones basically.
yeah, yeah.
It's
I found the story to be pretty entertaining, and I knew it was pretty big when I heard it on the radio, and then I went and already. I mean, it was 10 a.m. or something.
yeah.
So, I was going to put it on the CRNA business page, and there were already 3 or 4 posts on it
Oh
already.
really? Okay.
Yeah. So I
Yeah,
was like, okay.
I have some friends that play with the day trading, and they were in on some of the, you know,
Yeah.
they were sending me some pics of their, what is it, Robinhood accounts and
Oh
whatnot, and
yeah. It
they were
was a
up.
crazy time.
Yeah,
But anyway, so we're, hey, we're here to talk about multifamily, and we got several people on here that have a good bit of experience with real estate. So, I'm all about steering it back to real estate if we want to. So, were you guys able to get access to the video of the Zoom call from Monday night?
I got your email. I haven't opened it. I haven't watched it yet, but I did
Okay.
get it. Yes. Yeah.
I just wanted to make sure that I've never shared anything from Google Drive before in my life. So that was a first time for me, being all tech savvy that I am.
Yeah.
I know so many people are like, really, you haven't shared anything from Google Drive, but I just haven't had the opportunity to. So just want to make sure it worked.
Awesome.
So what's going on with you lately, Ryan? I've seen you post a little bit about another duplex that you're building, or
Yeah, I'm building another duplex that's going up. I think I'm gonna split a lot and build two more. And I did LP in a deal. It just closed today, actually.
Okay.
A Houston deal, not too far from my house, really, maybe 10 or 15 minutes. So we'll see how that one goes.
I think I saw you mentioned that you were getting in on that. What was the group that was with?
Some guys, they're Momentum Multifamily. They're from DFW.
Okay.
The lead guy, he was a Sumrock guy, but he's been out of the group for at least 4 or 5 years now. And then, yeah, I had a call with them maybe 4 or 5 months ago when I was just networking with the syndicators. And, I wasn't going to invest, but then I had lent some money. It was just I thought it was kind of a sign. I had lent some money and I got the money back. And then it was 50 that I got back. And then they dropped the minimum from 75 to 50 at the end. And I'm like, okay, perfect. Then let me do it. Let me just put that money in there.
Nice.
Yeah.
So yeah. And that's, when it's in your backyard, that's kind of fun too. You can go by and kind of check on it a little bit if you want. And
yeah,
see
a
what
lot of people in Texas, Houston is not the hottest market in Texas right now. It's Austin, it's Dallas, it's San Antonio, but I'm not really down on my city. I definitely think this administration is already hurting our city a little bit. The Biden-Harris administration, they're gonna inflict some pain on the city for sure. But I think it's still overall good property. It's a Class A property. Their rents compared to I think it was built 8 years ago. Their rents compared to some other properties right across the street that were built 3 years ago are quite a bit less.
Okay.
And then they're gonna put 900,000 into the property. Do nice fire pits, basically spruce up the amenities and spruce up the colors of the interiors. Not like a big heavy reposition or anything.
Do they have the Wi-Fi capabilities already within the buildings, like through like a Gigafy or something like that?
I don't know that I think they may already have that. Yeah, this property already had all the technology that you could have wanted. Yeah.
I wasn't sure if you were getting it from the first owners that had it or from the second kind of,
I think they're going to be the second owners.
So
those are some really good other sources of income aside from the rent. That and they have so much technology. I'm sure you'll hear of all this new integration and that you can access your heater and air conditioner remotely, like all these apps that people has when the residents have, and that's just another way of increasing or driving your rents up, and that's Class A type of marketing. So that's really exciting, but that's not the case that that we are into. So we just like to hear that and go tour those properties.
yeah. And that's the thing. I was talking with Bruce Willett out with Bakerson Investments in Arizona, and just talking about the different amenity structures and things like that. And he's like, you can do a lot of that with Class A properties, but your Class B and C, you really have some caps there that it just doesn't make a lot of sense to go in some of those directions because you can only drive up those rents and for so far. So Maricela, I'm curious because you've mentioned, you and Chris have obviously a pretty vast portfolio that you're looking to convert into multifamily investments. Would you mind talking a little bit about the portfolio that you have and like how you built that over, how long it took you to build that and what that's, composed of right now, what that looks like?
Yeah, for sure. We have so our portfolio is a combination of single families homes, and duplexes, fourplexes, and an eightplex. That's as far as the residential part of it. been doing this self-managing, which is kind of got out of control right now. Is I mean, it's
Okay.
still manageable,
Yeah.
but seeing that you can have a more passive way of being still in the real estate with transitioning now to the syndications. So the way we acquired it, my first property that I purchased as a primary residence was a duplex. I house hacked that when I went to CRNA school. I left Austin and I have it rented, was rented out. When I came back, I went back and lived there. Just I build up my savings, and then I bought a second primary home, put in the minimum percentage, and then it was a value add as well. So transitional neighborhood, and pretty much moving. Actually, I had it renovated, and then I moved in. Then shortly after that, I got traveling, so I was locum full time. So I have to leave Austin. So at that point, I put it as an Airbnb. So at this point, I have a duplex that was being paid, by mortgage and everything, by its own rents. And then the house was Airbnb, and nicely, it was covering more than the expenses and making money. I mean, that just potentiated my saving potential, my saving abilities. So in between traveling, I was actually deployed. So deployed, you make money without overseas, no taxes.
Hmm.
So that saved me another big chunk. And that's when I started learning and educating myself about the real estate investing and the assets, and how to go about it to build your own. When I came back from deployment, I actually started looking at rental properties, and I look into a fourplex because I already had a duplex. So I'm like, that's doing pretty well. So let me see if I can either do more duplexes or fourplexes. The house was doing fine, but I felt like it was too much of a liability. If it wasn't rented, then it wasn't producing, and then there's only so much you can do as it's either that or go full time as a short-term rentals. And even though it was managing well, I have the team that was taking care of it, but I was still doing. I felt like it was too much involvement. Like
Hmm.
a house you rented for a year and you kind of leave it alone, right? And it was manageable, but I was like, no, I don't want to go for that model. So I went for the fourplexes. The person that was selling it was actually just trying to unload her portfolio. So I ended up buying two at the same time. These were purchased from. I was working in Virginia, and I got those in Austin. So I heavily rely on my contractors, and just doing the due diligence, and
Hmm.
and and also taking the risk, because I think till last year, and so I purchased those in 2017, and until last year, I met the last of the tenants that was living there for several years before I purchased, and then they were well established tenants and they were paying well. And that's kind of how I fall into Section 8. So a lot, not a lot of that, but a big chunk of those tenants were Section 8. I just learned the hard way and in the good way, the city pay for the rent, and it was a learning curve. But now I feel like it's a good business to have those that
Yeah.
type of income. Then after that, I met Chris, and he was already doing his own rentals in Florida. He was in the Navy, active duty, and I met him when I was doing an assignment in Italy and Sicily. And then we just kind of started doing just conversational talking about real estate, and then we started looking on more properties. Another opportunity for two more fourplexes came around, and at this point, we talked to the CPA. It just makes sense for us to get married. Just kidding. No, we were gonna do it either way, but by looking at like, it's seriously, as a couple, you have to take anything that advances you and decreases your taxes and puts you in a better position, right? So we purchased those two fourplexes together, and then from there on. So that was in 2018, the end of 18. So in the time that we've been together as an investors and as a couple, we have escalated or increased our portfolio from 11 to 34. So we got it with wholesalers. We were looking at MLS. We actually were able to move or rental or residents into a business line of credit with a rental portfolio, commercial portfolio, and that allows us to do a business line of credit, so that puts all the equity together from the houses, and allows us to buy cash pretty much and do our renovations from using the equity of the houses. So that's been pretty sweet. So along the way, we self-managed. We also started doing our own GC. We felt like we have a strong team, We put them to work during the weeks, and then one of us will fly alternating weekends to come and do the inspections and everything. But he is now retired. He retired about last year. So now we started getting. I've been talking syndication to him since I met him. He's like, I just feel like I'm already being committed with the Navy. Just you don't own your time. So we decided to wait. But as soon as he got his papers, he's like, okay, now we can start. So we started connecting with a couple out in San Diego, and then we started like just exploring what platform, what kind of mentorship we wanted to join, and we ended up falling for Sandrock, and that's been an amazing community to just learn from. And since October, I believe, last year to this month, we're part of 4 syndications as LPs in a total of 711 doors. And just today, we were greeted into a self-storage opportunity that we're going to be joining in. And I don't know, I don't have the numbers right in front, but that
Mhm.
should be closing in the next couple months. So that's kind of the in that short version.
Nice, nice.
Is
That's
that a is that an LP in the storage
No, we are
storage deal?
actually we're gonna be hands-on because we wanted a higher percentage. So and we want to learn that business as well. So we decided to do more than just LP.
well. I tell you that's pretty exciting. I'd love to be able to offer that to investors, at some point as well, because I'm very much about different types of alternative investing, not just multifamily. While I feel like multifamily should make up a pretty large chunk of a real estate portfolio and an alternative investment portfolio, but there's so many different opportunities out there as well that people can dip their toe in, and they serve as a hedge against different factors in the market as well. Certainly self storage is one of the more durable things out there right now.
Yeah,
So
we are actually already talking about acquiring more with the same partner. So we definitely will keep you in mind, especially because if we can gather a couple of investors quickly, and we can actually we do we're gonna be adding about, and I don't have the tracker right in front of me, and Chris, feel free to jump in, but we are gonna be increasing our unit number by, I think, 40%. That's gonna be a nice addition. So maybe for that might be, if you haven't, again, I'm just kind of, I guess, troubleshooting in my head, like I mean, we could do a loan, but if I don't know, I think part of it is educating others and sharing
Mhm.
the like how good this type of investment can be. So maybe if you come and play with that, like the improvement or addition of the units, maybe in the next one you already understand the business, and then you can come in as a partner. So
Yeah, yeah.
uh, we'll definitely keep you in mind. Go ahead, Chris.
No, she nailed it. The ad that they're looking at doing in the self-storage is about 6,000 square foot. She's still working on the makeup of what those size units are going to be based off of what the need is in the area. Yeah, that's the next adventure at the moment, and I think she pretty much hit it spot on for about the portfolio. So I'm really happy to hear from you that you feel like that whole story and scenario really plays well going into multifamily, because we don't have the big experience of running an asset management side of things, but at the same time we do, because we know what the property manager should be doing and stuff like that. So
Mhm.
I feel like we have the closer big picture of what should be happening. So I feel like that we can really do some value add into some GP spots.
Yeah, I think you guys have experience with self management. You have experience, handling different situations, and you've dealt with an eightplex. So what's to say you can't go down and take down a 30 or a 40 or a
Right.
50? At some point, you're still managing people and systems. And so if you've got systems that work, it's obviously a matter of being able to expand certain parts of that system, but I feel like you guys would be in a great position to be able to do just that, based on the extensive experience that you've gained over the course of several years. So kudos to you guys. And then the question I had about the self-storage unit, you mentioned adding 40%. So, and I'm wondering, are you guys actually going to build onto the existing site, or are you converting some of the bigger units into smaller units?
No,
So
go ahead.
the site itself has space for probably, I think she said there's the potential to add up to 14,000 square foot, but it just didn't seem worth it at the moment. So if we build out 6,000 square foot of a new building from slab all the way up and add that, then we'll see how long it takes for that to fill before we look to expand again if we decide to. Otherwise, it's always worth leaving a little bit of meat on the bone for the next guy, you know?
Yeah, yeah.
But it will, I think the numbers that she showed us, the value will almost double just by adding that 6,000 square foot and
Well,
raising
yeah.
the rents up to market.
That's really cool. And the other question I had for you guys, going back a little bit, you mentioned the Airbnb thing, and obviously people aren't really vacationing as much right now, but perhaps you're not having so many issues with that. But I was wondering if you guys had ever looked into corporate rentals, doing not necessarily the travel nursing, but people move around for different things, and they'll stay in a spot for a job, depending on where those places are. I mean, obviously Austin is a pretty hot market for stuff like that. Have you guys looked into the 1 month to 3 month stays for corporate rentals at all? And what did that look like if you did?
So even before COVID, we were doing another unit Airbnb just because we decided to rent a house as full, like for the entire house, and then we moved that Airbnb to a smaller one, 1 bedroom studio type, and it was bringing a lot of good cash. And then we moved that one into a duplex it was closer, more central. It had a bigger space, and the possibilities for income was better. So we decided to move that one there. And then the city of Austin started regulating the Airbnbs, which are shorter than 30 days, but they were still allowing the long term, which is considered, or the short term, which is considered more than 30 days. So we found through networking a couple that's all they do. That was their model for their business. They will find Airbnbs. They were like desirable areas, nice, clean, blah blah blah, and they pretty much, we put them in a corporate lease, and they furnished them. They took care of everything. They just cut us the check, and that was nice and sweet. Well, then when the city started regulating that as well, they said, no, you know what, we'll pay you whatever fee you need to pay. We're going to be out of the lease because we don't want to cost you a fee through the city. So they left. Then we decided to do it ourselves. So we sold that house, that duplex, from our business into Chris's name using the VA. And that was a nice cash out to have. And then we were like, oh, ready to get this Airbnb thing again. And then COVID hit. So we actually had bookings for the beginning of the year, and everything was canceled. So during our networking and just helping some of the organizations here in Austin, for non-for-profit, we have formed a connection with institution that hold houses or provides houses and meals and legal advice to immigrants that arrive they were released from the detainee centers. So during
Okay.
COVID, the centers were releasing massive amounts of people, and they found themselves looking for places to house these people. So we have, offered, established a relationship prior. So we pretty much quickly switch all the furniture and put them in, put like bunk beds so they can house more people, and the two
Yeah.
duplexes. So they end up doing that for 6 months. That was another corporate rental for 6 months, furnished, and it was nice. So now that they're gone, we switched back the furniture for a regular Airbnb, and currently we have two nurses that are working as a travel nurse here, they're in Austin, and they love it. They love that place, and they are a possibility of extending, which I'm pretty sure
Mhm.
they're going to be extended. So
Okay.
and those we found through nurses finders.
Yep. Nurse finders. Yeah.
Nurse finders, yeah.
It
And
was um it was actually on the Facebook page, the Furnish Finders Facebook page. I
Oh,
had
okay. Yeah, yeah.
posted, so I had actually posted on somebody's old post where they said they were needed housing in Austin, and I said, hey, we've got something available if you're interested.
Mm-hmm.
And like 2 months later, this girl just reaches out of the blue, a different
Mm-hmm.
person. She goes, hey, I just got a contract. I'm looking, what do you guys have? I'm interested. So I sent her all the links and everything to check it out, both on Furnish Finders and on Zillow, because you can get more pictures on Zillow.
Yeah.
And she was like, yeah, I love it. Want to come by? I'm going to send somebody by to take a look at it. Maricela showed her both halves because both parts of the duplex were open. We're like, you can take either one. It's up to you.
Hmm.
She goes, actually, I'll take the back one, and I have a friend who will take the front one. And so
Oh, that's
she
great.
rented both places to with one showing. I was like, holy crap! Just that was amazing.
Nice.
But
Yeah.
yeah, I always tell people, talk about what you do. Always, put it out there, whatever you can, wherever you can. And now I have this other little ad of go in, do a search at the top for your town, wherever your stuff is, and just add on, hey, I've got a place available, because you never know who's going to be looking later.
Yeah.
You know,
This is so fantastic. I looked into doing the corporate rental thing last year about this time, and I almost dipped my toe in. Now the way that I was going to do it was not with my own properties. I was looking to reach out to people who had homes for rent and say, hey, look, I'll take over the rent for this, a certain period of time, and then going in and letting them know, hey, I'm going to do a corporate rental with this, but I'll pay you the rent that you're asking, and and I'll have good clean, we'll have your house will be in better shape than it's ever been. We're going to take great care of it, and you don't have to worry about tenants that don't take care of the place, and we're going to get you taken care of, and I'll make sure you get paid on time, and then I would be running a corporate rental business, but obviously piggybacking on other people's properties, because that's certainly, there's a business model for that. But of course, I kind of pulled the reins back on that, and I said, I don't feel like I'm ready to do that yet. And then of course COVID hit and everything, and I was already deciding to do this business as well at that point. I thought, well, I'll get this moving instead, so I went in this direction. But I definitely see the value in corporate rentals, and I think it's fascinating. You guys have kind of run the gamut with so many of your experiences. So anybody else want to jump in here? Questions, comments, any other personal experiences with real estate that you'd love to share?
I had a quick question for Marcella and Chris. Is your storage deal, that's not through that's not raised through like the Sumrock, your mentorship, right? That's like on the side different, correct?
Correct.
It's actually in our mastermind with somebody from our mastermind.
Oh, nice. Okay, cool. So I had another question about your group. Now, the Sumrock group, I always get confused. Like, for instance, I watched a webinar of a deal a couple of months ago. It was like this guy Perry Zong and a few people. They closed on an apartment complex in Dallas, and it was all Sumrock people, and it said that it was approved by the Sumrock group. So I assumed that it was a deal brought to the group, and they were raising capital within the group. But then I hear like is it kind of like lifestyles in that can you raise outside the group, or can you only raise capital for a Sumrock deal inside the Sumrock group?
So we talked to different students and different other mentors that have done deals, and they only raise from the group. But I believe is that the reason is because they are so well established that the second that they put a deal, they already have people on the waiting list, because they have such a good performance, and they always they have just they're good deals, so people that have been there, they're just kind of waiting for the next one. And then there's other people that we talk to, and they said, no, we always offer it to our friends or other investors outside, and there's no problems with that. So it's all where you get the money from. And I feel like the people that surround him is what brings value to this community. So, and because I know I was like, Cardone, oh my gosh, I can't stand Cardone, blah blah blah. But he has an amazing community. He has the
Right.
energy.
Yes.
He has the money to talk shit to you, whatever. Like, he's gonna do it. Like, you're gonna have to listen to him, because you're the one that signed up for here. So I'm like, okay, I give you that. You're proven successful. So that's it. I'm not gonna complain about it, because I respect your accomplishments, and I feel the same with Sunbrock. And I know, because I have talked to some people, they're like, oh, I can't stand him. So I think it's not about the leader or the person that brings people together, but about what people is attracted to that community. And that community has been just so building for us. But yeah,
I was just curious because like I had heard that if you raise within the group, you could only raise within the group. But then this is a deal, and it was obviously like a Sumrock deal, because like every student on there, they were all like Sumrock people, and like it said that the deal had been approved by the Sumrock group to go, but like they were pitching it to whoever, like, you know, anyone in the public. I got sent in, they were like, hey, if you want to invest in this, it's you know, so that's why I was confused on the
So
setup.
oftentimes, and yes, I think it was yesterday we just had a summit with him. It was over 1,000 people in that meeting, and it's it's highly advertised. But
Mhm.
he always advised the students or the community, just if you put in out a deal, leverage anything that you have on your side. Tell them you're Sunbrook approved, because he already has proven that he brings deals together, that he has a community of investors, blah blah blah. So you pretty much tagging yourself to like, hey, I am with this guy, so that
Yeah,
increases credibility, and I think that's probably why it kind of confuses people. But that's
yeah,
one of the things. Like if we put out a deal, likely we'll say we're mentors of, I mean,
right.
another thing is like when they say they approve the deal, that means that the deal was on the right on the
Underwritten
road
by them.
underwritten by the team. And we also hear different things that some people is like, no, if I'm gonna take it there, they're probably gonna, they don't seem to like the way they underwrite their deals. So they just decide to do their own underwriting and then still go for it. So
Yeah,
I mean, if the deal is out there, I'll say make sure that it's to your advantage, that you vet the people. And I mean, there's nothing, if they're open it to you, as long as even if you happen to run into that video, right, and then you go and apply it's you're gonna have to be qualified. That's in the best interest that they vet all of the investors as well, like verification of your qualified investor.
Well, and I
So
think that that brings up the point of truly vetting the operators that you're working with. I mean, like somebody can. I mean, there are a lot of people who are in mentorship programs that they are looking to borrow the credibility of the mentor, and that's something where that helps a lot of first timers, and that's great. But it can also be a little bit deceiving to investors, and so you got to be careful and vet the people that are truly taking on the deal. Because you'll get some people that are just kind of brought into a deal, and they're kind of the big name, the big honcho, but then you question, okay, well, how much are they really gonna be in on this deal, or are they kind of the big fish that help them get the loan, because it's really this team's first time doing this.
so
So
the other thing, for you to say we're endorsed by, or we're vetted by Sunbrook team, you have to be a member of his team, and to join is at least $25,000. So
mhm.
that tells me that the person that is using that tag has invested on their own selves. You know what I mean? So one of the other things that, yeah, you're definitely going to have to ask a lot of questions, but they're very transparent on displaying what their investment portion
Mhm.
is. So
Yeah,
back
and
in
I
the,
wasn't saying anything disparaging. I
oh,
I honestly don't know. I mean, I've heard the name mentioned that you're talking about, but I'm not familiar with them, and so I don't have a dog in that fight at all. I know that, for instance, you can go onto my website, and I've got Brian Briscoe and Eric Stanley listed as people who are strategic partners in my business. And by strategic partners, what I mean is that they are operators that I hope to work with. I've also got Bruce Willett out with Bakerson Investments that I work closely with, but Brian and Eric are both part of the Michael Blanc mastermind. They did that because, just like you said, they wanted to invest in themselves. They wanted to get better at this, and they wanted to network and find offerings and deals. And so that was a big deal to them. Now they have the ability to stand on their own track record
mhm.
because they've done multiple deals and had multiple successes. So they don't need that as much as they did at the very beginning. So now, I mean, I know that they still list it on their website and things of that nature, and you may see it listed that they're a member of that mastermind on a PPM or something, but it's not something that they are hammering home right now.
Yeah, absolutely. I think it's all about the networking, and some doors are open because
Mhm.
associated with some other people that are already there, or they're gonna bring you in. So no, I agree with you. It comes back to knowing who you're giving the check to.
Yeah, yeah, absolutely. And I tell people, I mean, vetting the operators is just as important, if not more so, than vetting the offering, because you can get a deal that looks great on paper, but if you've got a team that can't carry out a business plan, that's never been tasked with doing that, then that's a real issue, that could pop up in times such as right now with COVID-19. When you have people that don't know what they're doing right now, that can be a real challenge. So, and it is nice to have people who have that mentorship to fall back on as well. They can get into that mastermind and shoot questions out and get great answers, as opposed to just going blind. So I don't mean to disparage the idea of mentorship at all. Mentorship is such a key component to all of this, but it really is a team sport, and you got to have that good mix of experience and energy.
For sure, yeah.
Yeah, I noticed like you were saying, like the big guy come in, like this deal that I invested in. One, I thought it was interesting. They had like a whole COVID clause, like in the PPM, saying
Hmm.
that we're in these times and these are our projections, but we don't really know what COVID entails, what the next 6 or 10 months or years
Yeah.
is going to entail. Basically, like nothing is guaranteed. It's an investment, and we could have this perfect plan, and COVID could come back and blow the business plan up. So they did have that you had to sign. And then on like the big guy coming in, they had a big guy coming in because it's like a $30 million apartment complex that they bought. So they needed a KP with a lot of net
Yeah.
worth, and that KP has like maybe 4,500 doors all in Texas. So he got like 15% of the deal, but I met the guy before, and I know this guy wouldn't just go and sign on just for like his reputation is on the line now if
Yeah.
these guys
Yeah.
if these guys drop the ball with a $30 million apartment building. So I would think someone that is that successful in the game would not just rubber stamp something without kind of vetting it out first, I guess you could say.
Yeah. Yeah, and I do agree with you there. When you've got people who are very successful, they don't tend to just take on anybody. And a lot of times it is people who they are even actively mentoring themselves.
Right.
And at least a couple of members of that group, they're actively mentoring, even if that's not, necessarily, a paid mentorship or whatever the case may be, like you do see. So
I
cool.
also
Cool.
I also think that part of the reason people go into that group is they're just coming in. They don't know the connections to be able to raise that money.
Mhm.
And like Maricel said, all you got to do is let them know there's a deal out there, and the money just comes in because everybody wants a piece because they know, especially if it went through the system, they know that it's a good deal because it's been vetted on the other side. Where you don't get that when you're just starting out fresh, and you can always co-sponsor with somebody with a lot more experience that people know the name, and as long as they're in on it, they know that it's a good deal as well. Whereas when you're on your own, you're on your own. Like, find your own money, and you don't have a name yet, so you just have to hope and pray you can raise enough.
Yeah.
Absolutely. So what else do you guys want to talk about? I know we've got about 12, 13 minutes left here. Any other topics you guys have coming across your desk and things you want to bring up?
Well, we are in communications with a mobile home park deal, and that's.
Of course you are.
I don't have the shiny syndrome, promise. No, we've been talking about it since last year, and when you put yourself out there, like the deals just keep coming and like laying in on your lap pretty much. The other thing that we did this week, we sold the first time. We will always been in the buying side, and for the first time, we actually sold a single family home, and that came out of pretty much nowhere. The house was vacant. We have put it for rent. I think we put it for rent. Anyway,
Hold on.
go ahead.
So back in November, I put it up for rent when a tenant wasn't supposed to leave till the end of January. And I put it up on Section 8 just so that we could try to limit the gap, right? about that same time, and one of those ads came into my Gmail, and it was for offer pads, and it's like, hey, we'll buy your house. And I was like, whatever. Let's see what they're going to offer, right? It's probably junk, whatever. They actually came in at a fairly reasonable offer that was more than what we owed, more than what we had invested in the property, and within about 10,000 of what we wanted. And so we punched it back out at them, and they came up like eight grand more for our walkaway.
That's
And
sweet.
we were like, you know what? Let's do it. No commissioning fees, no waiting, no showings, no nothing. And this is a property that as soon as we finished the renovation, I flew in July 4th of 19. I flew into town, and when I landed, I turned my cell phone back on, and Maricela goes, "We were broken into at the new place. Make sure you head over there first."
Mhm,
Somebody went around and kicked in the back door right after the freaking renovation was done.
mhm.
So we ended up putting up Simply Safe and putting up cameras and all this other crap so we can keep an eye on it. Caught the guy trying to break in another time.
Transitional
Yeah,
neighborhood.
very.
Yeah,
But
yeah.
the lady wanted to leave, and so we were like, you know what? If you want to leave early, you can leave early, because OfferPad said we can close anytime between 14 days after we do the inspection and whenever you want to close. And so we closed that sucker as fast as we could and get rid of it. But
Nice.
anyways, yeah, it was a nice seamless process, and they like I said, they offered a pretty good deal that we were like, where the hell are they getting that number from? But okay, sure.
Mhm. So now you got a little
Okay.
extra cash you can put into a mobile home park.
Yeah.
I've never looked at a mobile home deal. I've often wondered what those numbers really look like and how the structure of that is different from a traditional multifamily.
The model that we are considering here is that we're pretty much renting the land or
Mhm.
the space, and the tenants, I mean the owners of their houses bring their houses, and pretty much there's the infrastructure, pipes and drains, and pretty much moving a trailer or a mobile home is apparently very expensive and troublesome. So once that they settle down, they kind of not going anywhere for a
Yeah.
good time, especially if we provide them with clean other spaces. And that's the plan, to take them on distressed properties and then improve them. And along the way, we want to build more paths or spaces. And pretty much there is a program that you can, like if you have a KP or you have a line of credit, that you can open a line of credit. The company will bring their houses, their homes, and put them in your place, and pretty much you advertise them. And once that you sell them, you give them their part, and then the tenant gets I mean that owner gets the part, and then you have a rented place and an improved neighborhood. And Chris, feel to elaborate more. I'm sure
Yeah.
there's a lot of gaps that I left there.
I'm going, ooh, ooh, I'm cringing. No. So the first part of the deal that we were looking at, it currently has 8 pads with the chance to grow another 30. That's where
Oh
we got to do
wow.
all that infrastructure. And it also already has a storage unit on the property that is going to pay our holding costs while we get everything prepared, while we get those other 30 pads going. So it floats just enough, or if not a little bit more. I don't remember offhand, but it's going to cover the cost of the loan while we're doing the infrastructure. Then I think Darren said it's like 25K for a single wide and maybe 50K for a double from the manufacturer. And
Mhm.
then we can turn around and sell them for 100 and 150. And the structured deal that he has with the current owner, each sale, the owner gets 12 grand, and that pays off the principal.
Mhm.
So when we're done selling all these new homes, the principal's gone. We didn't have a big loan. All we did was do interest only payments in the mean while we're selling it all out.
Are people paying that much for single and double wide trailers? I mean,
Brand
I
new,
guess that's just something I'm not familiar with.
apparently brand
Um,
new. He is very familiar with the mobile home
yeah,
section,
yeah. Where is it located?
Iowa.
Iowa.
Iowa. Okay. Okay.
Is this Darren with like W2 Capitalist?
Uh,
The
Yet
trailer,
another,
the mobile home guy?
yeah.
Yes.
Yeah,
Okay,
so he
okay.
actually started his own business this past year, of moving mobile homes.
Oh,
So
nice.
he can do the move, he can do the installs, he charges whatever he charges. But obviously for his own park, because he's going to be part of that park, he's we're going to do all that at cost essentially. maybe plus a little bit. But on top of this park, which was only going to be, I think it was 500K, he's got two other parks that are right down the road. One of them he owns and another one he's looking at. And he's like, if we do this as a 3-park deal, this is retirement money we're talking about. We're going to keep this generational and just retirement money. And yeah, so we're looking at being able to do economy of scale because we have to do some infrastructure at the other park that he already owns. So we'll be able to get all that work and get multiple teams and hopefully get that work a little cheaper than if we were doing one park at a time or, 20 spots at a time.
I think he already hired us since we did the,
Yeah.
the quad renovation.
Hey, I told him I'm more than willing to come out and run the backhoe to dig some ditches. I have no problems with that. I would love to learn how to do that.
So you're gonna 1031 this house that you sold in Austin into this mobile home park, maybe? Or you
So we talked to a 1031 exchange holder or facilitator. We gave him all the numbers, and because we are so close of really not, because we refinanced twice. Was it twice? So we pushed
Refinance once.
once. Okay, so we already pulled some pretty much our money back, and we've been cash flowing and all that stuff. So we're not making that much, and
okay.
It was
enough.
only like 25 grand.
Yeah. So
And he's like, it's not worth it.
but we, because we have been documenting our money going in, we are going to create expenses that are going to reduce the capital gains, but
Okay.
by paying us back. So pretty much we're getting our money back again. So as long as it's documented and you can just, like we have all this promissory notes and everything. So when the house is sold, you are obligated, that house is obligated to pay its debt, which is to us.
How much is that entire project going to cost, and how much money are you guys raising to be able to get that deal going?
The mobile home.
Yeah, the mobile home part.
I think the raise is only supposed to be 600 to 800.
Wanted to raise a little more than that. He said we'll stay under a million because he wants to have the capital. The thing with Iowa is the building season is shortened. So he wants to
Sure.
make sure that once that we're in, that he can easily, like, even if he has to bring more people, like expedite the process during the times that the weather permits. So
Mhm.
I think because of that he wanted to raise a little bit more to be prepared. But
I,
that's less than a million.
I know there was a number thrown out there that was right around the million mark, and I can't remember if that was the value, like the total purchase price, or if it was the raise. I can't remember
Have to
offhand.
double check, yeah.
That's a million just for the one park or for the three parks?
That was for three.
Three parks.
That was
Okay.
for three, and I don't remember how
Wow.
many doors total that would have been, or how many pads. I know this one park was 38. The other park that he already owns, I think he said was around 30. It's either 30 or 50. We talked to him about that one about a year ago, and we were just like, nah, it just needs too much. It's too much money invested before you ever start to see anything back. But because this other one's got the storage units and everything, you're not going to lose money. At least, you're sitting even for a year, maybe two. It's going to be a little bit before we see returns on it, but he's looking at keeping this through his kids and maybe his kids type of thing.
So you'll just partner with him on the deal, basically.
Yeah, there's I know he's talked to at least 3 people. I don't know how many he's looking at
Nice.
altogether, but the more the when he expanded, we were like, all right, we definitely want a bigger piece of this pie.
Yeah,
I think he definitely don't want that many people, and he's kind of vetting his
sure.
investors by like what your investment criteria. Like if you're going in for cash flow, it's gonna be really difficult to meet that goal for you. That's kind of what he told us, and we are not looking for cash flow immediately. We are more for buy and hold for the generations to come type of thing.
Mhm.
And
Yeah, and it just depends on what people are looking for. I mean, for sure, and that's.
Yeah.
But I've kicked around the idea of the whole generational wealth. Buying things and not necessarily, having to turn around and sell it in 5 years to really keep your money going and keep the investments going. Having that offering of, hey, you're going to buy this and then it's going to be part of what you keep and in your family and it helps you for the long term. There's a certain, uh, I don't know. It's just it's a nice quality to have, nice option to have.
and I know three, the two of us plus two more. Well, the two of us, the guy who's running it, right, the sponsor for it, and then 2 other investors that are going to be involved, and all of 4 of us group wise, we all want to do the generational thing. We're
Mhm.
all good with that. So, you know, he's going to manage it while he's there and kicking, and we'll take whatever share we end up with in the end here. But yeah, that's what he's looking for, is more like-minded people going
Cool.
that route.
Yeah, I've talked with a couple of operators about things like that. You know, what do the numbers look like if you're gonna instead of trying to fix and flip this kind of thing, you know, what does it look like to actually hold it? You know, because I mean, it's one thing when you put in that much work into a property, you know, and you got things running the right way, and then you just kind of, okay, I'm going to go ahead and just sell it to somebody else and see what they can do with it. And there's also something that, you know, you're leaving some meat on the bone for somebody else too. Maybe you're not going through and fixing everything because you don't want to make it look like the perfect property that now there people can't come in and actually do anything with it. You've already raised the
Yeah.
rents as high as they're going to go. You've fixed everything that needs to be fixed, and you know, so at that point it's like, okay, well, what is there left to do? You know, how much cash flow or returns can you produce from something like that? So I would imagine there's more room in mobile home parks for that.
Yeah, and some people want turnkey. You know,
Yeah.
that's the other thing. Some people want turnkey. They don't want to have to do stuff. For this, for 2 of these parks that I know of, the third one I don't know as well. We haven't really discussed that one as much. But for those 2 parks, it's all going to be brand new homes. It's all going to be brand new piping, brand new electric, all that stuff. So we're good for 30 years, you
Mhm.
know, at least.
Mhm.
And so this investment now is just going to pay off big time on the long haul. And then we're going to have nice homes. We're going to have new homes that are placed there. So, you know, it won't look like the rundown. It could almost be a Class B type situation, depending. I don't know. Maybe I'm bullshitting there, but I never heard of a Class B mobile home. But hey,
No, there is something. I don't know.
There-
We haven't put
yeah,
boots on the ground, so it's also a neighborhood. You know what's around. If there's cornfields,
Mhm.
maybe there's a chance.
Yeah, yeah,
yep.
cool.
So
So
that's
I just
awesome.
wanted to share the you know how I'm always opening my big mouth and the Facebook the CRNA Facebooks and real estate investing and all that stuff. And I had a lot of people reaching out to, hey, you know, I want to learn about how you did it, blah blah blah. So
Yeah.
I did pick up a couple phone calls, but it takes at least an hour on the phone to, you know, kind of go through this and blah blah. So I'm like, I
Mhm.
decided to put together just like a quick meetup and record it so that when I get inquiries, I can pretty much send them that direction to show them kind of what we've done in a nutshell. And then I decided to do some like series of case presentation for each property and what we learn, how do we acquire, what
Mhm.
strategies we use. So maybe some people that is getting started can benefit from that.
Those case studies are not done yet. So if anybody wants to help,
Yeah.
I'd appreciate it. No, I'm just kidding. I'm
Now
just
these
kidding.
are case studies on like the smaller portfolio properties.
Yeah, and you can like let's suppose, you know, you don't building. I haven't done any building. You can present that. It's open to whoever wants to
Mhm.
participate, and you know, I don't have to be the only person speaking in the room. So if you want something, like if you want to contribute and bring your experience as a builder, I'll be sitting there listening.
I was just gonna say we're game to listen to that story for sure.
Yeah,
Absolutely.
because we didn't even get
Yeah.
to touch on any of that, Ryan, and I
Oh
was
yeah.
hoping to get into that. So I guess you'll just have to come back
And I'm
next
not the
month.
builder, by the way.
Yeah.
I'm the developer. I buy the lots, get the plans, get the permits, and
But there's a
I hand it
lot
off.
to that. Like
There is a
there's a
lot.
ton to that, and a lot of value that you can add with that. So I look forward to hearing more from you about that, maybe in the next meetup or something. We got to
Yeah,
figure
no,
out
for sure.
something. But yeah, and Wally, I mean, you know, I don't think I mentioned it, Maricela, but he's a Navy veteran as well. So you know, that's something that you know, you and Chris can kind of, you know, give him, you know, a little bit of advice here on some of the advantages of being a veteran and having access to different types of loans and things. So
Oh yeah.
you know,
I'm always down to learn.
Thanks for your service. Appreciate
Yeah.
it.
Yeah,
so
you too.
well, you could talk about yourself. I can talk about you, but you can talk about yourself if you want to. But yeah, he's a cool dude.
You must be the older brother.
Yeah, I
care,
am. I am. Yeah, yeah, yeah.
taking care of the young brother. That's
Yeah, I
awesome.
got him by 7.5
yeah.
years.
Oh yeah.
Nice,
But
nice.
but
Well, I'm
yeah.
telling you, if I have to do it all over again, although I love doing anesthesia, and you know, guys, it pays really well. If I have to do it again, I will definitely focus my attention more in real estate. It took me about 14, no, about 13 years to build, and from where I started. And if I knew about syndications, if I knew about other creative ways to acquire, I'm telling you, there's so much potential on this. So you're in the right place for sure.
All right, guys. Well, it's been a pleasure hosting all of you, and I appreciate everybody coming out tonight and spending an hour with me, and sharing all of your different experiences. This has been fantastic.
Yeah.
So,
Thanks, Bobby. Appreciate
all
Yes,
it.
right, thank you guys, and have a
good
good
See you
job.
evening.
guys.
Nice meeting you.
We'll see you next time.
All righty.